Join me for Option Stars 2019. Hi, I'm Sarah Potter, and I'm the founder of YouCanTrade.com. I want to tell you about a really incredible in-person trading event that I'm hosting with Larry McMillan and TradeStation. It's going to be this October, and it's called Option Stars 2019. It's a 2.5-day event designed to give you everything you need to know to start trading options, to trade more confidently, and to be more consistent with your trades. This event will be held in Newport Beach, California, October 3rd to 5th. It starts with a night out for an options primer Thursday night to get those options juices flowing. Then Friday morning, I'm going to start off live trading in front of you. We're going to go through trades, we're going to talk about how to analyze those trades and manage the positions and how to close those out. You'll also be able to hear from Larry McMillan, who has over 40 years of options trading experience. He's going to talk to you about how to find unique trading opportunities and specifically how to use volume and options volatility to your advantage. Here's your chance to network with other traders and also an opportunity to see and hear from seasoned veteran traders so that you can jumpstart your own options trading. Just visit www.tradestation.com/optionstars. I hope to see you there.
Hello, everyone. Welcome to Mastering Futures with TopstepTrader, hosted by John Hoagland. I'm David Russell, VP of Content Strategy here at TradeStation. It's great to be with everyone. How you doing, John?
I'm doing great, David. How are you?
I'm great. All right, let me read a few quick notes first before we start talking about the markets. John Hoagland is Chief Performance Coach at TopstepTrader, helping retail traders become funded professionals. He started in the futures industry in 1983 and soon became a proprietary trader for major institutions. Following his passion for teaching and scouting talent, he joined TopstepTrader in 2011. Every morning and afternoon, John's on hand to guide traders in the key markets of oil, the S&P 500, gold, and the euro. He draws on market profile, proprietary rules, and volume patterns to discover trading opportunities. John also places heavy emphasis on risk management so that individuals can succeed day in and day out. Now, some important disclosures. The following presentation is for educational purposes only. All symbols and trading ideas discussed by the instructors are for demonstration purposes only and are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone. Options trading carries a high degree of risk and is not suitable for all traders. Please read the disclosure information in the webinar chat or on the TradeStation website. Now, as a reminder to everyone, if you want to ask any questions, you can do that in the Zoom webinar chat, which is at the bottom of this presentation. All right, well, I want to just, start the webinar by mentioning some interesting things I noticed. Now, you guys may or may not know, I run the blog here at TradeStation, and the website is insights.tradestation.com. I'm going to share that in the actual chat panel. I want to mention because there were some interesting things that I noticed that I think kind of John and I, both are looking at the market from different angles and finding similar conclusions. The VIX last week had its largest drop of, since the very beginning of 2019 in terms of just total points for the week, 4 points down on the VIX last week. Banks today, the KBE Bank ETF had its biggest rally since the market rallied the day after Christmas, which is pretty amazing because that was the day the whole market shot higher. Today, the S&P was, pretty much flat, down a little, and you saw banks have a monster rally. That was interesting. So I think it's interesting when we look at this. We came into 2019 with interest rates nosediving lower. The Fed has already stepped up, and now we're starting to see, from when I look at things of banks bouncing and some other things happening, we have a lot of fear that have been priced in about the trade war and the global economy, and now some things are starting to show that people are starting to look past that. Remember, we're going to have in early October some kind of news of a summit between President Trump and the leaders from China. So based on all that, I think it's interesting because we have things happening in oil. We have things happening in the S&P. We have things happening in gold. Looks like John has S&P up. So let's start with that. John, ES, what's going on?
You're right, man. Traders do have short memories, right? Nothing has been resolved as far as trade is concerned. The economy seems to be doing well, so I think we're back on happy soil, at least until the wrong tweet comes out, right? So let's go. Let's start with the dailies here. I'm going to start with the daily and the S&Ps. Always like to start with the daily. Last week we had a nice breakout to the upside. This was a level right along here that was a weekly kickoff level. These lines right here represent important levels of inflection for longer time frame traders from where I'm sitting. We saw that the market broke above our weekly kickoff, drove higher. We're really looking for this market to be able to hold this level up here in order to hold the current market state. In other words, in order to continue to move higher, I feel like we need to really hold this
And that's 2970, John?
2970, correct. Now, the level that we broke out of last week was 2928. Wow, that was pretty close, pretty close. So here's the 2928 area right here, okay? This was that inflection level that kind of started on what it looks like Wednesday, continued on Thursday, continued on Friday, and really we're looking for this market to hold at this important level. Here's our all-time highs. Okay, we were noticing approaching those all-time highs that our auction to the upside was getting a little bit tired. We see the same thing happening in gold right now. We see, a drive, a balance, a drive to a new area of balance, a drive to a new area of balance that overlaps the next area of balance. So there were things that we saw in the profiles in this area, a couple in this area that said, you know what, this auction is getting a little bit tired. I was looking for some sort of a correction, not like 20% correction. I was looking for the market to come off a little bit and really just kind of consolidate in this area, really just to kind of even out inventory so we would have the power enough to move the market considerably higher from that point. Well, as we were discussing the fact that this auction was getting tired, one of these days was when they lowered rates. The next day was when Trump announced new tariffs. So there was some exacerbation to the downside. Technically, I think a pullback was needed and was just at that time. But of course, we had some discussions that exacerbated the problem. I didn't think it needed to go this deep, but it did, and I don't get to choose that. So now we seem to be. We've had 4 weeks of balance in this area. We've broken out above it. We're looking for it to hold above here. So now that takes us to this morning. So here's Thursday, Friday, and today's action. So if you listen to the market forecast, you're going to hear me talk about gaps quite a bit. Now, in a period here, okay, these are the profiles. In a period, I'm going to try and make this as visible as possible. Okay, this little caret right here is the opening of the regular trading hour session. Settlement was right here. Okay, settlement is approximately 29.8075. That's the closing price from Friday. When we take a look at this, basically almost 100% of the activity from last night's trade continued to push price higher. When it continues to push price higher, we're looking at very low volume in this regard. Let's put the volume up there and see what we can see here. Nope, that's not wanted. Studies.
You go to studies, add study. It'll be under indicators. Make sure you're in indicators.
There we go. Volume.
It's up a little bit. A little trick I use sometimes is if you just hit V, it will jump down the list.
Oh, cool.
Yeah. I like shortcuts. Like you said, traders are not known for their patience.
Yeah, right, right. Absolutely. So, all right. So here's all the activity from last night. Very low volume. You see that every night in the S&Ps. It's a U.S.-based product, so there's not going to be a lot of longer, stronger money, U.S.-based traders or banks or anything like that that are going to be that interested in anything that's going on overnight. So what we're counting on here is the fact that we opened with already an accumulation of long and short time frame. Okay, our shorter time frame traders, day traders, traders that are going to be going home flat tonight, or at the very least by the end of the week. So we're not looking at stronger money here. We're looking at weaker money. Not a lot of it either, right? But there is enough volume in this move to the upside that when the U.S. session opens up, okay, it opens up with a gap. Here's Friday's high. Here's our opening price. So we leave a gap right here. We leave that first minute of trade, which is the opening range at the extreme, at the highs here. Now, one of my hypotheses this morning for the S&Ps was, if we open higher and we leave the opening range at the low, I'm looking at a pretty decent move to the upside. But the opposite occurred. Well, I don't get to choose what occurs, so I have to change my strategy according to what I'm seeing in the market. The market leaves the opening range, that first minute at the extreme high of the day, and begins to drive back into Friday's range. Well, once it got into Friday's range, we can see in this 30-minute bar, all of these longs, once the market opened, they recognized they weren't going to be getting any help from U.S. buyers coming into this market. They bailed. And when they do that, they tend to do so en masse. This is weaker money. It's almost like, there's everybody standing at the door and somebody yells fire. They all get out. Okay, so they bring price back down to settlement. Now, I believe, at least this morning, my hypothesis was, hey, you know what? We broke out to the upside. We've got a pretty tight support level in the weekly kickoff. Okay, weekly kickoff today, this week so far is 2970. So we're pretty close to that. So now I'm going to try and stay patient. Now what happens is we have what we call a double distribution trend day. So when we look at this, we see a period, we see an area of balance in time here, okay? So we get 3T, we get 5 30-minute periods all in the same area here. Well, at some point, sellers come into this market and they move the market considerably lower, okay? They drive the market basically right to weekly kickoff low. We test Friday's regular trading hour session low, okay? If you remember, weekly kickoff low is 2970 even. We got a couple of ticks down below that, and we turned around. Sellers backed off. Buyers came in, and then we started to just kind of rotate in this lower area of distribution. Okay, and by the end of the day, by the end of the session, these little app period single TPOs had largely been taken out. So when we see a double distribution day like this, where the market opens, drives one way, balances, continues to drive in that direction and creates a new area of balance, there is some power to that, but it's the weaker of the trending type days. If you get consistent lower highs, lower lows, lower highs, lower lows, that's your strongest conviction in a trending market. So the market trades down to weekly kickoff low, does not accept, does not spend much time or much volume down there. We reject, sellers back off, buyers come in, and then we return the market back to the center basically of the range. We start taking out this low volume area, this low time area. Market didn't spend a lot of time there. It went from here to here relatively quickly, and then we started our lower area of balance. So what does this mean for us tomorrow? Well, at the end of the day, I'm already thinking, well, what if we open above today's range. Well, that's going to give us another opportunity for a gap rule type of situation where if the market can't close the gap to today's range relatively early, we're going to trade in the direction of the gap. We're going to look for this market to continue to grind to the upside. If we were to open right in here, okay, right by this little single TPO, this very thin area of the profile, very little volume or time, it's going to tell me, okay, well, the market needs a little bit of digestion. I'm going to look for opportunities in this area of balance and in this area of balance. We call it a day of repair. So if the market opens between these two levels, okay, let's call it value area high and value area low from today.
What would you call them, John? 2970 or what?
What's that?
What would you say those actual levels are?
Well, this is value low, so we're looking at 2971 quarter,
Mm-hmm.
and then value high, 2982.75 ish.
That's a pretty nice. I mean, that's 10 points.
Right.
Yeah.
And that's really what our range was until we started extending outside of it. That initial balance was right around 10 points. Okay, that initial balance is the first hour. IB low is 2980.75. IB high is 2990 quarter. So just short of 10 points. S&Ps always seem to like those 10-point increments, especially when volatility is out. It just seems to like those 10-point moves. So it basically doubled the IB on the way down, which does sometimes tend to happen. Markets are very visual. Traders are very visual. You know, it's the vision of the traders that drives the market. It's opinions. It's, you know, all of the motivations and decision-making processes, of course. But you know, this downward double distribution trend day did not develop into much of an emotional event. Just seems the market was looking for another test of that weekly kickoff low, another test of that level before looking for some direction. The market's job is to facilitate trade. If it's not facilitating trade in one area, it's going to move to another area. It's always looking where two-sided trade can occur. Two-sided trade means equilibrium. It goes from balance to balance to balance to balance. Today we went from this balance, created this balance. Now it seems as though this balance is being rejected. We go back to this balance, and as you know, as the perception of value changes, price will have to move to create that facilitation of trade.
Now, what happens if we break to the downside? Where should we be looking next on ES?
This is an excellent question. All right. Okay. So if I were to throw a couple of lines down here, horizontal line. Okay. So our previous weekly kickoff high was 29.28 even. It was resistance. It then becomes support. 29.28 even. Okay, so this is virtually where last week's weekly kickoff high was. Okay, we broke out of it as this Wednesday, Thursday, Friday. We broke out above it and closed above it on Wednesday. When we're looking for a change in market state or direction, we're always looking for some sort of acceptance of that change. There's 4 legs on a table. When we're looking for acceptance in any market, in any market state change, we're looking at 4 legs: time, volume, participation, and momentum. Okay. So when we closed up above this on Wednesday, it was a pretty momentous day. Okay. There was a pretty big range, closed right near its high, above weekly kickoff high. So we're number one, we're seeing momentum. We're also seeing, did we do a lot of volume down here? No, but the S&Ps don't really do big volume on the way up. They do big volume on the way down. So I wasn't that concerned about the volume on Wednesday or Thursday. Or Wednesday I was in the market. Thursday and Friday I was not. So I'd have to double check. Let me take a quick look here at something. All right, so we're going to take a look at participation on this move to the upside. That was the 4th. S&Ps. Okay. So when we're looking at participation, we're looking at money coming into the marketplace in the new direction or a continuation of that direction. Okay, so this being the 4th, okay, the day we broke out, we had a pretty good spike in open interest. Open interest is the total number of contracts outstanding. When we see a big jump in open interest on a day when the market has the opportunity to change the market state, it's been basically ranging for 3-4 weeks here. This was an opportunity for the market to show us it's time for a change. And we added 27,562 in open interest on this session alone. It's not necessarily a huge change, but it is on the higher end of the kind of open interest changes that I track. Okay, I'm on this page here. It's the second highest change in open interest in the last month. Okay, so that says, now, usually we're looking for volume. We didn't bring a lot of volume, but that does not necessarily, again, concern me with regards to the S&Ps. We see volume increase on the way down. When the market starts to kind of move higher, it seems to cut off volume. So that it's not the best judge of an auction by looking at the volume in the S&Ps. If you want to track the New York Stock Exchange volume day over day, you might find that as a better gauge of true volume. You always want to look at the base of the product that you're trading, right? So S&Ps were trading 500 different stocks. If the stock market, if the New York Stock Exchange has a lot of high volume, you can bet that there's money moving around, right? So we move to the upside. We're holding above an important inflection level here at whatever that. 2970, right? So if we can't hold here, there's going to be some considerable space down here. My first stop would be the old weekly kickoff high that we just broke out of. It was resistance, right? I mean, we had 1, 2, 3, 4, 5, 6, 7. How many days did we get up above there, even trade above it, and we didn't accept it? But what happens is, you got to look at this as an order book. If there are sellers above this level, how many times are we going to go up there and we're going to eat away at those sell orders before those sell orders are exhausted, and all those sellers might then need to head the other direction. They might need to perpetuate our move to the upside. So, now we're looking a little toppy up here. Okay, there's a lot of trading left this week. I want to see this market hold this level. And if we can't, this will probably be the next stop, that this previous weekly kickoff resistance level that should become support. Always keep that in mind. When you've got a good solid resistance level and it finally breaks, that can be pretty dependable as a support level if the market comes back and retests that level.
Awesome. Well, no, that's the thing I've been watching. I was watching that range in the S&P myself around, 29, between 2930, 2940.
Mm-hmm.
And just wondering, that's my view. Or not my view, but my question is whether, this is a sharp move in a couple of days. And my question is just if maybe there's some people waiting for a retest back down to those highs. I mean, August was pretty interesting because we had like a pretty much a strong range. I mean, it was a pretty clear range all month. And I just wonder, that's just something I wanted to ask you. I mean, you're putting your line pretty close to kind of what I was thinking.
Mm-hmm.
Now, what's interesting is, I'm looking last week and wrote my article about the end of the week. And I noticed that oil had one of its best weeks in, I think, 8 weeks. Baker Hughes rig count was the lowest reading in like almost 2 years. And then we see, rallies in energy stocks, much greater than the actual rally in oil itself today. There's a trend line coming down oil that voila, we're pushing through. It's also the 200-day moving average on oil. There's a new guy over there in Saudi Arabia running the oil ministry. And on top of that, now we're starting to hear about a Saudi Aramco IPO coming back. And when that happens and you have big players and big Wall Street guys in there, and they're seeing a lot of fees tied up with selling this IPO, you have to wonder if maybe now there's going to be a little bit more of a shift on the bull side in energy, especially if we get something coming out from China. So a lot of thoughts I just threw out there, but what are your charts saying, John?
Well, I agree. I mean, our weekly kickoff high from last week remained our high today, but it has already become, remember what was resistance becomes support. The fundamental news, I think, is friendly to higher prices. The rig count, we've had, a few straight weeks of draws in crude stocks here in the U.S. Unrest in the Persian Gulf, change of energy ministry in Saudi Arabia, and if people aren't worried about the economy anymore, well, that I think was a big part of what was holding this market down, even facing supply issues, was the fact that, if the economy's not going to be doing well, we're not going to be moving stuff around as much. We're not going to need as much crude oil, and that's going to put downward pressure on it. But, at least for now, at least for today, with the breakout last week of the equities to the upside, our breakout, our ability to hold that weekly kickoff low today, it just kind of bodes well to confidence in the economy. And, we all know that one tweet and that can all get knocked down. But like David was saying, traders have very short memories and short patience. So, this I think is a pretty substantial move. If we can maintain and continue to accept above this weekly kickoff level this week, I think there's plenty of space for us to continue.
Yeah. Well, I was just wondering, you keep saying the word short, and then I started thinking, are there people you think trapped short in crude here that we have the potential for some forced buying if bad news doesn't pan out? Or is there anything like that? Or is it just a technical thing of the way that we've just managed to get back above your levels here?
Well, just looking at the consolidation that we've had over the past, we're coming into almost a month in this consolidation. That's the 9th. Yeah. So the 9th is when we came up here and we've accepted above this level. We resisted this level, and that's where kind of our weekly kickoff levels have been ever since. But when we come into this consolidation, if you're looking for, shorts being trapped, this consolidation kind of evens out inventory over time. So I'm not sure if we've got shorts trapped, but what I think we have is an even inventory for in multiple time frames for long and short. Now, everybody says, well, of course they're even. For every long, there's a short, but the difference is the motivations of these traders. The motivations are much longer for longer term money. So if they have evened out their inventory, and the fact that we have accepted above this level and we've driven higher is forcing them to need to adjust their inventories, then I think that's where our power is going to come from this. I don't know necessarily if there's too many shorts in this, because we just came out of the longer area of consolidation, but I still think that there's plenty of money on the sidelines to move this market higher.
Yeah. No, it's interesting. I was looking at the trend line, and then I was watching your webinar today on YouTube, and you drew almost exactly the same trend line that I've been watching. And I was just noticing energy. I think like a lot of people, we write it off. We think that oil will be dead forever, and then suddenly it's not. I just think it's interesting that you're noticing that. And I've noticed myself that in the market, there are these relationships, one of the reasons, that you see people buying things like bonds when they think oil is going to go down, because if oil goes down, inflation goes down, it makes it easier to justify low interest rates. But then when that thing starts to turn, it's a rotation back toward oil and away from gold, I might say, which we're going to be getting to.
Mm-hmm.
So it's just interesting to me to put all these pieces together and to kind of see this basing pattern, because it looks to me like at this point, people have the sellers are simply getting worn out in oil. Now, John, there's a point you always make, which I think is important. I want to ask you, one of the things to be careful with crude oil is this is a product that people actually use. We like trading, but people actually use it for something. So you do have commercial people who have to do their roles to move from one contract to the next. And you've made the point that very often that we don't get price movement while that's happening. And when is the next time in oil when we're going to have to start worrying about a monthly roll?
Well, typically, unless the 18th is on a weekend, it typically occurs on the 18th. So the 18th is, it's a week from this coming Wednesday. So we are coming into rollover.
Okay.
It's the same day as the FOMC meeting. Isn't that lovely? But when the market is see, this is going to be a tough rollover. I think this is going to be a hard rollover for our longer, stronger money. The reason that we kind of see the market fall into ranges during rollover. Okay, here's 17. Okay. And we're not going to go too far back with too many explanations, with too many visions of that. But the longer, stronger money, the people that really use this market to protect themselves against price swings, the hedgers, the producers, the users, they have a lot of contracts with which they're going to need to move from the current front month of October into future months. So their focus on rollover week becomes more about trying to get a cheap roll, because if I can, sell out of my October high and I can get into my future months a little bit lower, that I'm going to be interested in doing that. Because if I have 10,000 contracts to trade and I'm going to use the spread to make that switch, okay, to make the rollover, 10,000 times $10 is $100,000. I can save myself $100,000 just by executing my rollover on the bid side or the offer side, whichever one is to my benefit. So a lot of the focus of the bigger, stronger money comes during rollover, more about getting a cheap rollover or legging the rollover correctly or cheaply than they are about directional activity. Okay, if we look at this, here's the 15th, 16th, 17th, 18th. Well, I mean, this kind of spans our current weekly kickoff high and weekly kickoff low. We're looking at this as an area of balance. So the market, while it looks directional on the chart, didn't really move that much and didn't change market states. Right now, we're in a possible market state change in crude oil, which may further complicate the rollover for our bigger, stronger money. What we got to keep an eye on, what direction is the market attempting to go? Well, obviously today it's attempting to go higher. How good of a job is it doing getting there? Well, we're not seeing a big boost in volume here, okay, on the daily. Now, is part of that possibly rollover related? It might be. It's a little early for that, but I would be looking for an increase in volume in a market that is attempting a new market state. We've been ranging. This market is attempting to move higher, not seeing great volume. It'd be interesting to see what the open interest is like tomorrow.
Do you think it's possible that we see something of an accelerating of buyers into oil at this point, when you consider that there's about a week and a half until the roll begins?
Yeah, well, I mean, this is why, these weekly kickoff levels are levels that I believe and we believe that are going to force bigger, stronger money to need to adjust inventories. Are we always right with that? No, we're not always right with that. But when we are, it usually provides a pretty good opportunity. And I think today, it was a pretty decent opportunity. I mean, we're looking at the daily chart here. I don't trade overnight.
Yeah.
I started my day at 8 o'clock this morning with regards to trading crude oil, but the market was already headed this direction. Now it just kind of rotated the better part of the day, but still it closed pretty well.
Yeah. No, it's interesting to me. It does definitely look, like things have changed here, and there's a lot of news priced in one way in the market, and the American production is definitely slowing, and that's the real bugaboo. It has been just a flood of American oil into the market, and that trend seems to now, for now at least, have kind of calmed. So if you throw on top of that a resolution to the trade war, suddenly, oil is not looking as terrible from the way that people are going to be looking at things, just overall the way people assess the market. Okay, but talking about things maybe not looking great is gold. I mean, gold was shining bright for months here. We talked about it as it was breaking out of that tight range. And I think about 2 months ago, month or two.
Right here.
Oh yeah, you and I were both thinking like this was something that had just started to move. It was there was not a lot of accumulated longs in it who were going to be taking profits, and we didn't see a lot of pullback after this initial break, and sure enough we did get that continuation. But now it's a new day. Now we already have a Fed cut. We have the possibility of maybe things not being so bad with China, and gold just whacked. And the Fed's going to be allegedly cutting rates and all that stuff, and people still are selling gold. So what do you think, John?
Well, technically, this is a very similar technical situation to what we saw at our all-time highs in the S&Ps. Here we have balance. Here we have direction. Here we have balance. Here we have direction. And here we have an overlapping balance. When the market is putting balances in and then leaving spaces between the balances, even big spaces, that's an auction that is still kind of representing as healthy. Okay, now here we have this, which is kind of overlapping this technically, I feel like it technically was set up to happen. When you take a look at the volume, okay, we're putting in higher highs here, but overall we're cutting off volume.
Yeah.
Okay, then we get a nice little push back up to new highs. Okay, on the day, okay, we put in a nice volume bar here, but as the market just kind of rotates here and balances, we're seeing overall volume starting to cut off again. Now we get a couple of good volume days up near this weekly kickoff high, and it was like my older brother's been accumulating silver, physical silver. Where are you going to put all that? But he was all excited, early last week because there was a $30 move to the upside, and then the following day I think they took it all back. And I told him, I said, with regards to gold, I think gold is a little bit overbought. I think gold needs to get a little bit of a pullback. So now, technically, I believe it was bound to happen that we were going to get a pullback. As far as fundamentally, you mentioned last week, VIX took 4 full points off it. Fear seems to be subsiding. It's a good thing for longs in the equities that investors and traders have short memories, and probably a little bit rough on our gold. We're in a flux area here. Okay, we do have this trend line which had 1, 2, 3, 4, 5, 6 contact points. Yeah, we looked below it. We didn't necessarily close below it, so that's why I've left it on here. You say, so if we're going to see this market change market state, change direction in a bigger way, this is step one. right down here. Okay, we're looks like we're closing below it. I don't think we did in regular trading hours, which is going to be interesting to see tomorrow. But if we continue to spend time down here, if we build some volume down here, then our next step would be this. Okay, I love it when it happens when it's right on the line. Okay, those tend to be some pretty interesting days, and some of your bigger opportunities. I don't know if we're going to get the opportunity to see that from above. Maybe it's something we'll be able to see from below. We do see a possible head and shoulders beginning to form. If we can't accept below this, we could put another shoulder down here, which might put us right on this level right here, which would be a pretty important inflection level along this trend line along with.
So we can get a bounce that, which makes a lower high than we saw about a week ago.
Yes.
Yeah.
Yes. So this would be, typically a pretty good, if we were to put up that right shoulder over here, might be an interesting opportunity for us there.
No, it's interesting. I mean, I just think it's interesting that we had gold break above your level today, which oil, break above your level at 50.70, and then gold, it barely, it kind of like, closed right at or right on your low of 1507. 1509, about $2 below the low. So John's support line is 1509. We closed at 1507. So, from my perspective, it's just when you see something like this, John, there's not that much more news this week, kind of like you said, we have.
It's been weak, right?
Yeah. So the question is when you're in a situation like this, do you look for levels to hold, or do you look, how do you actually know when a move is real? Like for gold, if it goes down to 1505, does that mean it's lights out, or is that the actual time when suddenly the bears are gonna, like, say tomorrow morning we break lower in the overnight when the volume is light, 1505 or something like that, not a lot of volume. Would then you be thinking that maybe people are trapped short in the hole and we might actually see a squeeze higher?
It's possible, but it's that 1509 level is going to be somewhat, and I hate this, and I don't like doing it or saying it, but it's kind of a short below, long above level. If it becomes magnetic, which does from time to time happen, it can chew you up. You're buying just above it, selling just below it, buying just above it, selling just below it. It can chew you up. So I'm really hoping that does not happen. Now, there are a couple of features about today's profile in gold that are encouraging for continuation to the downside. We have excess. Okay, we have one single line of TPOs hanging off the top. This is a selling tail.
Around 10 o'clock this morning.
Right.
Good.
Well, actually, I think it's closer to the open.
Okay.
Ish. Because A period is the open. Okay. So we have excess up here. Price got too expensive. Buyers backed off on the open, the U.S. Open. Okay. Now we see sellers come in and move this market lower, move the market lower, move the market lower. We've got basically kind of a long, normal kind of trading day, a little bit directional to the downside, but we get a nice pullback. We end up closing the day. Let's see here. Okay, so we're actually going to settle above weekly kickoff low, but the market continues to drive lower. The interesting thing about this is this little spot right down here. Okay, this bar, okay, only goes one tick past this bar. In profile, this is considered a poor low. There is no excess. Price did not get too expensive. Or excuse me, too cheap. Sellers were still willing to take that next step beyond the previous low. This is an indication of an unfinished downside auction. Now, does that mean that this downside auction has to finish or continue tomorrow? It does not. It does not, but it will remain hanging out there like a sore toe. And as we know, anytime you have a sore toe, you're undoubtedly going to bang it on something, right? So we have excess at the top. We have no finished downside auction in the regular trading hour session in gold today. That leads me to believe that our weekly kickoff low, if not penetrated and accepted below yet, may be coming in time.
Interesting. So more leaning toward the bear side in gold.
Yes.
Okay. Very good. And would you say you're more leaning toward the bull side in oil?
Yes.
Okay, good.
Yes. Everything is subjective. Nobody knows anything for 100% sure. So you have to trade from hypotheses. You have to have an educated guess as to what you think the market is attempting to do, and then again, how good of a job it is doing it in what you think it is doing, right? So here, we broke out of weekly kickoff high on Wednesday to Friday, we closed above another level that we view as important. We held it today. We had a double distribution trend day, but did not continue in that direction. Volume, it's okay. It's not indicative of big downside volume. It's basically the same as it was on Friday. So here we are, man. We're trying to put together what we're thinking about for tomorrow. If we're to look at the daily in crude here, when you take this point of control or this touch point and this touch point, and you come across Friday's high is a third touch point. Well, we're right on the weekly kickoff level where we kind of crossing over it, maybe today, maybe tomorrow. But what am I looking for tomorrow? What if the market opens higher? What if the market opens inside of today's range in crude oil? What if it opens lower? What is that telling us? So I'm always going to be, hey, get a little bit of emotion from Friday's trade, right? We had a big up move, 670s weekly kickoff level. We're looking like a kind of a short covering rally here, okay, with the P shape of the profile from today. Market opens, kind of drives higher, kind of drags along the top. Do we have excess? In other words, do we have a selling tail? Yes, we do. We have a little bit of excess up here. We also have excess down here. So if we open in the middle of the range tomorrow, I'm going to try and stay patient and look for opportunities at the extreme. You can see how value moved higher today. It's outright higher than it was on Friday. So it looks as though this auction to the upside, which really began today with the breakout above that weekly kickoff level, is doing well. Volume, open interest. If we look at open interest tomorrow morning and the open interest is saying that we lost open interest, in other words, we squeezed a whole bunch of shorts out of the market today instead of adding new money to the long side, that's going to be a sign of weakness for me. Number one, if we're chasing shorts out of the market, what are we taking away from the marketplace? We're taking away buying power. But if we added open interest on an up day, on a breakout like we had today in crude oil, that's going to say, you know what, it bodes pretty well to continuation for this. Volume, participation, open interest, participation.
So there's actually a question to one of the answers. Someone did ask an answer to one of the questions. what technical indicators will market turn around and CL to turn bullish? And I think that's one thing right there. I mean, I don't know if you consider open interest. I guess it is technical, depending on your definition of technical. But that would be something that John will be watching tomorrow. So that's an answer
For
to your
sure.
question, sir. That
For
was
sure.
one of the questions I've been wanting to make sure we addressed.
Yeah, I think it spans technical and fundamental.
Yeah. So good. Well, John, very just briefly, I mean, the other thing you cover is the euro. I mean, the European Central Bank meeting on Thursday morning, they're expected to basically fly over, jump water, helicopters, money, gold, everything. They're just stimulus, cutting anything they can do. Basically, people are expecting now the most dovish European Central Bank ever. But at the same time, we have Brexit, which again, we might see geopolitics actually trumping the economic news for the fun. But still, euro. Is there anything here in euro, or do you see anything in it? Just really briefly.
No, not really. It's centrally located between weekly kickoff high and weekly kickoff low. Right now, it is so short time frame controlled. When we look at today, we opened at point of control from Friday in these profiles. We traded to basically a little above value high from Thursday. It's these short time frame levels that tell us right now, if there are longer time frame traders in this market, at least today and for the last 3 days, they have been uninterested in adjusting their inventories. I think there's so many questions as to what's going to happen with that. I think that everybody is as evenly hedged in longer time frame as they possibly can be, and they're just waiting for new information.
Yeah. Well, speaking of opportunities, why don't you tell some of the things you guys are offering to people over at TopstepTrader?
Yeah. Let me find it. Where did it go?
Well, John's looking for that. I just want to remind everyone that TopstepTrader is actually a service that helps you become a professional futures trader, and John's now going to tell you how it actually works.
Yeah, the process is really quite simple. We are in the business of helping people professionalize their trading. We're looking to fund traders. We're looking for people that can show us that they're consistent, profitable, and we basically give you it's an objective evaluation. We're looking at in 2018 alone, we funded more than 1,000 futures traders. You can see some of those futures traders talking about their experience here on YouTube, on our YouTube channel. There are a lot of resources available for you to use here at TopStep. We have some pretty good trade reports that are part of your trader profile. We have YouTube information. We have live information, and I put the forecast and recap together with my partner Dan every day. So we're really trying to and continuing to expand the information that we bring to you. As much as we can. We want to teach you how to fish. We don't want to be handing you fish. So the best trading system in the world isn't gonna matter if you can't fund it, if you don't have the capital to trade it. That's why we're here. So if you wanted to come to TopstepTrader and get funded, there's a bit of a process to it, and it's really kind of quick if you're a good trader and you have a solid strategy. You can do it in 15 trading days. Step one is basically more about proving you can profit. Once you're finished with step one, you'll move to step two, which is more about managing risk. There are a couple of extra rules for step two. We want you to scale into your account. As you build your account, we will allow you to trade more contracts. Focus is really more on risk management and discipline than just looking to make money. So let's say step one, there's 4 different account sizes that you'll be able to choose from. The most popular is probably the 50K. Your profit target is going to be $3,000. You can trade up to 5 contracts, although I do recommend starting smaller. And there is a subscription model that you're going to have if you are in the trading combine. You're going to be expected to follow a few rules. We don't want you to lose too much money on a given day. Let's put this up here. Now we're looking good. We don't want you to lose too much. You're going to have a daily loss limit. You're going to have a max drawdown for the account overall. We don't want you to lose too much on the account. We want you to stay within a certain number of contract sizes. Like we just told you on the 50K, you can trade up to 5 contracts. That's across all of the products. So you can trade 2 S&Ps and 3 crude. That's your max position size. Okay, we're looking for you to show us how you can become consistently profitable and then graduate to step 2, more focus on risk management. There are a couple extra rules where you're also going to have a weekly loss limit in the 50, 100, and 150K accounts. We don't want you trading during specific major economic releases, which if you've ever traded during FOMC or any high volatility markets, you may have already decided that's not for you. We want you to scale your contract size up as you make profit. The scaling plan will be, readily available for you to review before getting into step 2. But once you're there, it's guaranteed funding. There's no subjectivity. We're not going to look at what you did and say, well, you just got lucky, we're not funding you. That's not part of what we do here. That's part of the step 2 process, is to just show us that you can have some consistency and show some risk management. But once you're funding, you're going to be able to keep the first $5,000 that you earn. After that, we'll only take 20% of it. You'll only pay us when you pay yourself. You're going to be keeping the 80%, remember. You will have the opportunity to possibly trade some additional products. Withdrawals are always free, and of course, we're industry low commissions. You can begin your trading combine with TopstepTrader at 20% off your first trading combine using this discount code or promo code. This will be available for you to use to take it 20% off your first trading combine before the end of day on Friday.
Awesome. Now, folks, remember, John and I do this every other week, and we're getting back to our regular schedule now that summer is over. So we will be back on Monday, September 23rd, and then again in October. So we're going to be here every other week. It's always good to talk to John. Remember, he has his webinars or his YouTube presentations 15 minutes before the market opens and an hour before the market closes on their YouTube channel. It's always good to talk to everyone and to speak with John. I hope everyone has a great trading session tomorrow, next few days, and next 2 weeks until we speak again. Thanks.
Thank you. Thank you, everybody. Trade well.